What is up, guys? It's your boy No Risk, No Premium, back with another episode of the Market Overview, guys. Today, what do we say? We said we want to see. I want to see if any back tests hold into our areas from yesterday, where we had some highs. Right, we had some highs. We had some nice wicks down. Right, ended up holding that 44.10 area, which, if you remember, we wanted to be dip buyers here on Wednesday. Right, from 4,000, or 4,400 all the way to 44.10. So we came down. No body closes on the hourly. Actually, very bullish structure here. Nice higher lows, nice higher highs. And we are going to look to continue the upside. Now we're going to look for this break and hold. Call it 44.40 to take it easy. It takes you up to 44.48. Above there, 44.68. We could get some running tomorrow if we want to. Just know previous week high. Okay, previous week high is at this 44.48. Okay, 44.48 area. So that could give us some potential, okay, resistance. Above that, we got some room to run to the upside. Okay, absolutely need to hold. Bulls need to hold 4,400. Underneath there, we have a nice 20 to 25 point sell we could have. Okay, SPY gonna look very similar to this ES chart here. Why? It's a cash ETF. We all know that. Okay, oops, still got my fib retracement on there from this morning. Want to get that off. Here we go. Here we go. What do we see? What do we talk about? Talk about the weekly high. Cash high here. Tuesday of last week was our weekly high. Monday, we did not trade, so it was a Tuesday start. So you could see right up to the beginning of this gap fill. Right up to the beginning of this gap fill, right up to the pre-market high. Could not get through, but still bullish structure, just like that ES chart. Remember the dips down? This is like 4,400 right here. This was 44.10 basically. Nice dips into this area, held and went higher, but been choppy trading all day. See how up and down it's been? Up and down these last 2 days. Been tough. You've been having to have patience. You have to have patience. If you buy time on your contracts and you buy less of your position, it'll allow you to have more patience. Okay, tomorrow, very simple. We either break and hold this 438. Okay, 438. Let's see what on the high is. It's 438.44. 438.44 has to go to fill the gap to 439. Above 439, or above this gap here to 439, we can get booting, scooting, tooting all the way back up here to 442, 444 above there. But this will be that previous week high level. So watch for some possible another rejection here. That would be nasty. Maybe a possible liquidity grab into side and then take it off, possibly forming an inside week. I don't know. I would think I need confirmation to break above higher low in here. Okay, higher low in here intraday on that 438.44 to then take us higher to 439, or just wait for that break and hold at 439, because this thing will explode for another 2 to 3 to 4 points to the upside. Bulls need to stay above 434.50. I think the only really big short is either if we have a major rejection here for this gap fill, okay, or we break underneath this 434.50, that would take us all the way back down to 432. What's going on with Qs? Q, big tech, pretty much. Okay, big tech. I'm actually gonna not show this anymore because the yesterday high day might confuse you, but higher low, higher low. Oh, did we make a lower low here? Nope, this is the first hour. So technically still a lower high, but not as strong as SPY, not as strong as IWM either. So interesting, tech is finding some balance in this area now, right? We can see this balance starting to kind of just back and forth, back and forth. Could this be an extended bull flag? Could this be more consolidation, accumulation? Is it distribution? I don't know, but I think we have to get underneath 357.50 for us to think we have way more continued downside. We drop probably another 6-7 points from there. But if not, anytime down into this 357.50, 360 area, it's just been bought up. So keep on doing that. Keep on doing that. Break and hold 366.50 takes you 368. That opens up 372 to the upside. Okay, 372 to the upside. I think this 366.50 would be a huge break, but obviously above 365, where we had the cash high 365. Okay, that would open up 366.50 here, then 368 above there, taking you 372. Underneath 362 would open up this 360, 357.50. I like the bounce of 357.50 to 360 in there. You have to use this range because we don't have perfect bounces in here, but there should be some demand left over. So anywhere from 360 to 357.50, I think that's a bounce. Break and hold underneath. That's the only short I see to go down and target 352, 350 below there. IWM, redheaded stepchild, the Russell 2000. Flagging out right underneath where? What was this level? We talked about 186.75. Flagging out right underneath it. Looks like as long as we get over this today's high, so call it 187, break and hold 187, look for a higher low above all these candle wicks, would take you to 189 pretty much. Pretty much blue skies above here. IWM's leading. More than likely, we can see the broader markets have buyers come in as well. So dip buying on the other two ETFs is very possible. That's SPY and QQQ. Remember that back test? We talked about the gap fill and go. Gap fill reversal. We got it right here on IWM. As you can see, went literally touched here, gap fill, and went bonkers. Went bonkers. Only real short I see is if we get under 184 and you would target 182. Okay. Under 182 would take you right back down to that 179.50, 180 area. But this looks strong as we just have higher lows, higher highs, higher lows, higher highs. So look for this break and hold of 187, target 189, 192 to the upside. Okay. Other than that, did I show the pre-market data? I don't think I did. Oh my God. If you guys never watched this channel, I'll totally understand. I fucked up so bad. Look, PCE tomorrow, 8:30 a.m. Eastern Standard Time. Then 30 minutes in, we've got all the University of Michigan inflation expectation, probably the consumer sentiment data there as well. So big PCE data coming in 1 hour before. Big consumer sentiment and the University of Michigan inflation expectation. That's 30 minutes in. So just know if you're trading within the first 30 minutes, we have that data. Things get a little squirrely, liquidity grabs, stop runs, whatever you want to call it. We could have some wick up, wick down. So just be cognizant of that. Other than that, guys, wake up early, get your levels right. And of course, don't do anything fucking stupid. We'll see you bright and early. Peace.